Hey guys, Fredpasselli here. So what I want to talk about briefly today is the no tax on tips and no tax on overtime, how it's going to affect you in 2025, and what your tax return might look like in 2026 when you receive that refund or if you're going to owe any money from it. So first off, this was passed in January of 2025 under the One Big Beautiful Bill, and it went into effect pretty much right away. So if you earned money from tips or overtime, it's going to be effective this entire year. So basically, when you go to file your taxes in 2026 this year or 2025, some things are going to be implemented that hopefully will trigger a refund for you, because this is going to be a pretty substantial deduction if you receive income from tips or overtime. So to start off with, the first one is no tax on tips. That is going to be a $25,000 deduction, not credit, but a deduction in your taxable income based off of the tips you earned. So if you earned, let's say, $30,000 from tips this year, you're going to get a reduction of $25,000 off of that $30,000. So your taxable income from tips is only going to be $5,000. Now, this isn't a dollar for dollar credit, but this is a reduction in taxable income related to tips of $25,000. Now, like I said, $25,000 is the maximum amount. So if you only earn $15,000 in tips, you're only going to get a $15,000 deduction. Now, another thing to realize on this is there is a phase out. If you earn above an adjusted gross income or a modified adjusted gross income of roughly $150,000 as a single person, you're going to start to get a phase out of that $25,000. So it's going to be a little less of a deduction. So your tax preparer, or you, if you do your own taxes, you're going to look at box 7 this year on your W-2 to see what can be deducted from your tips. That's normally where the tips are reported. Now, overtime is going to work in a similar way. The amounts are a little bit different. For overtime, the deduction is going to be $12,500 for a single person and $25,000 for married filed jointly. This is also going to be a deduction. It is not going to be a tax exemption or a tax credit. It's going to be a reduction in taxable income of, let's say, $12,500 or $25,000. The key thing to note with overtime is it's only going to be the time and a half portion of the overtime worked that is deductible, not the full per hour amount plus time and a half that you got while working. So that's very key to note, because there has been a misconception that once you work on that overtime, you get paid the normal rate plus the time and a half. It's the time and a half portion that is going to be deductible off of your W-2, off of your taxable income. And you're going to look at box 14 this year to see what overtime you're eligible to deduct. Now, again, phase out is going to start at about $150,000 for a single person and $250,000 for married filed jointly. Both of these are going to work in the same way. They're going to essentially be deductions and reducing your taxable income throughout the year. They're not going to be dollar for dollar tax credits. That's something very key to note. So you're not going to get $25,000 back from this. You're going to get $25,000 times whatever your marginal tax rate is. So if you're in a marginal tax bracket of 20%, then you get this $25,000 deduction. That's roughly going to be $5,000 in tax savings. That's the $25,000 times 0.2, which is 20%. That's $5,000 in tax savings right there. So this is something key to bring up to your tax preparer, your CPA, or whoever might be helping you with your taxes, because it's going to be a really tough year implementing this, because a lot of employers are not going to be ready. They're not going to present the data correctly. So it's very important to get on top of this early and make sure you're doing it correctly. Because if you're earning tips, whether you're a bartender, server, whatever it might be, or if you're working overtime as a police officer or firefighter, you want to make sure you get all of those deductions, because your employer did not withhold taxes differently this year based off the law passing. So it's very, very key that you get ahead and you're making sure you get maximize those deductions to get the highest refund possible.